What's going on, everybody? Time for a little bit of YouTube. Now, we had a little bit of a request to put in for what I do for a morning setup. What's the routine? What do we do? Let's get into it. So this video is going to be all from start to finish on what I would look for setups. Now, this is going to be a little bit more vague. It's more going to be a general one. Obviously, a setup on a Wednesday CPI Powell day versus a Friday PCE versus a Friday like today without data and without any catalyst to move us crazy. It's going to be a little different, but let's go some general outputs on what we are looking for, because this stuff's not going to work if you're having a pre-market with, I don't know, a 10% mover catalyst like CPI. You obviously are going to start setting up your day after the CPI data and so on and so forth, like we show on this channel. But for a general overview of how I would start, it starts all on the daily chart. Now, we look for the best candles to use on the daily chart to start our long-term Fibonacci is number one for me. So all of these candles are pretty decent here, but there's two that'll kind of stick out. And I like the ones with larger bodies and when the candle on the daily chart hits a key point. And what I mean by that is moving averages. This is a 200 EMA. This is a 200 SMA, obviously, in the daily chart. 10 SMA in blue. Candles hitting a moving average have much better algo response than one that do not hit candles, okay? So when we're looking at stuff like this and we're saying, we have some tags on the 200. Up here we had some candle tags on the 10. Those are the candles that we're going to apply the Fibonacci to, right? And we have high-low is what's going to be a basic range to teach you the most basic ones. Now, it's either a high range, which means high body on the candle, or the candle has to be hitting multiple targets, okay? So I'm going to go from last week into this week. So today's Friday, right? So all the way back here. On Monday's the start. That was the huge call that we had actually on this channel, 1,000 points to the downside. What I'm going to do is I'm going to do two Fibonacci's so I know what to start. Last week into this week, okay? So last week's candle, we have a 50 SMA, 10 SMA red candle that hit multiple points of interest, aka the moving averages. I'm going to point that to the downside because it was last week's candle. We already knew what would happen, okay? This is going to be a pretty interesting setup because it picks bottoms. So I'm going to put this one out for free, even though I shouldn't for my paid chat. Here's the fib box on the daily, pointed to the downside. Picks the exact bottom of the 1,000-point dump that we had called that Sunday, this past Sunday, 2618. Okay. So last week's candle puts a Fibonacci. Now I know where those points of interest are on the daily. I'm going to turn this to white, because it's all from last week for me. And then I'm going to make a daily fib on this week right here, because we have two fibs to work with now. So this start of the week, let's say we're starting the week here, and screw it. I could do it from this trade day for Friday. Let's do it for today. I'm going to come in and I'm going to take yesterday's candle, high-low. But I want you to articulate now and think about it, because last week we have a candle that tells us exactly what to do with the fibs. Walks down. 1618, 2618. This is obviously reversal. We called that. Bottom picks up, goes to the 1618. After the 1618 hits, consolidates and goes to where? Next target's going to be 100 fib. That's how we do a walk down. A walk down the fib and walk up the fib, okay? Break of the 100 goes to 1618. A lot of the times it can come back to the 100, then go to the 2618, but this one just washed through. And on the way back up, it does the same. It goes 2618, back to 1618, then back to the initial 100 fib. Okay. Now I'm going to add another daily Fibonacci like we just did yesterday's. I'm going to change these neon green so we know which one's which. And then I'm going to drop down into the intraday. Okay. I have my fib set for the daily, nice and clean and basic. Intraday time. 5-day, 5-minute chart for the last trade days, Thursday and Friday. Let's take a peek. Well, we know we're coming up from the 2618, right? So price action tells us anything from the bottom that we had picked, momentum up, it gets us to the 1618 here in the white, 443.76. We got to pay attention to what levels are in play from yesterday and today, right? Yesterday's play levels, we had the 1618, and this is a recovery level. What did it do? Price action comes up, breaks over the 1618, comes down, back tests for confirmation of strength, the 1618. This is the one that's pointed to the downside. Continues on trend. And where's it going? It's going to the 100 fib, right? That's Thursday. Check out today. Nice and easy. Do we have that daily Fibonacci? We already hit it yesterday, so we're not too worried about it today because we were all long buys today. So what's the golden key of the day? Well, yesterday's Fibonacci, right? So if we hold above the golden pocket, my sentiment still going to be long. So we have an opportunity to come back down, test near the golden pocket, and range back up to the 100, and inevitably come to the other daily fib as a precursor of pretty much 550 or 456, right? That's the next target. Maybe coming into next week, we'll see what it does, but I set my fibs. After I set my fibs, I look for algorithms, okay? So in the pre-market on this channel, you'll see us with those giant long tag wicks, something like that. We'll show you what an algorithm looks like, or a data candle, right? And today we don't have anything. So here's an algo candle right here. This is what they look like. 7 a.m. Central. That's an algo candle. So I'll come and I'll fib these out as well. I know there's going to be a lot of fibs on, but I'll do that. So I'll set, if they're there, I'll set those out. We don't have any today, so we're not going to worry about those. After I look at pre-market, notice we have no algorithms, no data, no nothing. I'm just going to run what I got off here. Now, when I don't have an algo to go off of, and when I don't have any kind of clean and clear cuts, I will move to usually a pre-market high-low Fibonacci instead. So again, pre-market high, pre-market low. And I know it's going to get a little busy with the fibs, but we delete them as we go. Okay. So now we have a standard color Fibonacci, which is our multicolor. The green, which is yesterday's daily. What do we have here? Well, we have a double point of interest because these Fibonacci's overlap, 4497, 44922. Both the daily from yesterday and the pre-market high-low fib box both come into almost the identical spot. So what does that tell me? That means today's level of 44922 to 4497 is a very strong over-under level, okay? And what did we see here in price action and pre-market? Tagged, broke over, tagged, still had a reaction, broke under, tagged, big under, tag, broke over a little bit, still working on it. Okay, we're at a decision making. But if you were to only use that one Fibonacci along with a VWAP indicator, you can see right there, it's very clean, right? So moving on into the next indicators. Now I have my fib set, which means pre-market high-low, I'm at the golden pocket. So today we long called this higher low. We longed it up to the golden pocket. That was one of our long trades. You can check it out on X, and we'll do another YouTube video after this. But that is the setup that we had taken to the golden pocket, and it comes up. Now we're just using fib ranges, and that's my setup. What's next? Well, after I have my Fibonacci set, I'm going to pay attention to my anchors, okay? So I'm going to jump right into anchors. QQQ, pre-market, we're going to reset these. So, and again, if you look on X, this is locked? What the heck? No. Give me my anchor, fool. It's not letting me move my anchor. Okay, I guess we'll just redraw them because even though they're not locked, they won't move. Good old trade of view. So I picked from this lower high sequence in, I wanted to see this guy right here. We'll set that at a high for a back test. And this was another part of our long. So again, if you see our calls on X and Twitter, we called long off green VWAP. It would come back to the blue VWAP. So now I have my fib set. I'm going to go move into the anchors. I'm going to start at pre-market like always. And we're going to do our pre-market high and low anchors, which is going to help me with trend, okay? Now, what does that look like? Well, because we had called it was going to come back down here already, and that was from yesterday's anchor, and we'll get into that in a second. We go pre-market. So we have a top anchor that has no tag again, nothing, live open tag, called it. Low tag, we already have one tag, so it's an okay line. We're more worried about the green here than other, but we also have a trend direction, okay? So we have something that's going to tell us that we need magnets on that trend. So downtrend for reversal needs a magnet back to here, okay? Because this is a no tag. So the bounce out of the gate and the long call that we did right here was based on fibs and this anchor. What's the next piece of the pie? Well, now that I have my pre-market set, and again, I move this over as they recalculate, I'm obviously going to start up here for the next one, and we slow and steady move those as they calculate. Next, I'm going to go look at what anchors we had from the prior day that needed a tag. This was one of our biggest precursors for today. Now, again, every day is going to be different. Yesterday's lows. I put an anchor here in the green. Do you notice that that anchor never came back and tagged, right? All that price action, we came close, but nothing tagged. Which means the next price action day coming in, price action has a really good chance to come back down, right? So if I go to Twitter, and for my trade setup for the day, and we go, hey man, we're going to come all the way down to VWAPs and we're going to have a super big long day. This is where I called it on that lower high. This is where we got that VWAP. So when I seen this lower high break in, we called it, circled it, 445.50 short from days back, right? That anchor is extremely important because it did not get a tag, right? Nothing over here, which means the next day coming into here, there's a magnet available. Price action will magnet and be drawn to that anchor. Now you see we hit it here in pre-market. Okay, that doesn't matter as much. Live tags are what I worry about. So this was nothing to me. We opened up and pushed, and I said short, 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 this lower high right here. We called it. Why? Because the green VWAP still has a chance to tag. There's nothing guaranteed in the market, but we have a high probability that the magnet will drag price action to the VWAP and continue higher. Okay, and that was our whole long call for the day. So I set up my daily Fibonacci's. I set up my 5-minute VWAPs. I like the 5-minute high lows. I look for the prior day. Let's say I can't find this. Let's say this one doesn't exist. Okay, this one doesn't exist. So I'm going to grab the end of day anchors, I call these. And you've guessed it, they're from the end of the day. Last low of the day. Last high of the day. The heck? There we go. Did we get a tag on this one? We got to check this one first. See, we got a tag on this one, so that one is done. Last one of the live trading hours. So now I'm using last tags. Now these are a little bit different than the other ones. These are all working. It's not if, but when, okay? When these will work out. Here's 2 no tag anchors. I'm going to move into the next day. We're going to get live reactions again on these anchors. Look at, pop back up. First tag. You're going to hear me all the time. First tag, I don't care if it's a VWAP, 100 EMA, anchor, Fibonacci. The first tag matters the most. The algos are poised to those. They're all over them. So when we called long here, boom, another anchor hit. These are all different, but they're all working out perfectly. And then we had it cross right here. So I'm not too worried about that lower one because the lower one had already hit. But our top one for that long, perfect. And once those are hit, they're off. Okay. And then for the pre-market setup for the rest of the time here, the only other things I look at is the pre-market for algos and where we're at for moving averages. So for moving averages, the daily 10 SMA is very close. And that's why we're assuming a magnet is going to come back on just because of the daily. Now, this is very vague. Every day is going to be a little different. I want you to set those fibs, set those anchors in the pre, watch for algorithms in the pre. And again, watch our recap videos here because I cover how to use every single pre-market Fibonacci every single time we get them. Now we come into today. What does the moving averages tell us here? Because we got to worry about psychology more than just drawn lines on the screen. And I'll show you here. Let's reset this one. We have to use magnets in first tags and retraces as confirmation. So let's talk about the price action movement here. We break, this is the 50 SMA in the red, 100 EMA in the green, 200 EMA in the darker, 200 SMA in the pink salmon colors, okay? So we break through the 50 SMA. What do we do? First tag of the 100 EMA, bounce point, we call it this. Where do we retrace to? Well, we need a back test of confirmation of weakness to continue downtrend. So where would we go? Back to the 50, right? Because we just broke it. So once we break a level, we need to what? Back test it for confirmation. Comes back up. Oh, lo and behold, it's the 50. We call that push into the gap short, snaps the 100. Comes into what? 200s. Okay, we got a snap of the 100. Same scenario, different moving average. Comes to the 200s. We called long after that 1,000-point dump overnight Sunday. We picked the bottom. We just showed you the fib that picked the bottom. Up, up. And what do we target to? Well, are we going to target the 100 EMA today is the psychological question. Do we have a catalyst that has a chance to open here and push all the way up to the 100 EMA on a Friday with no data, no Fed speaks, no PCE, no nothing? Likelihood? Not very high. Why? Well, a couple things from TA, okay? Gap, gap. We have a double gap candle scenario, okay? Which means the body of this candle, and I'll give you another freebie in my elite systems that I use, is a zone that is not to be messed with. It is extremely strong. So if I box that out and I come back into the trading intraday, you notice we got some really good interactions at that body, right? So do we have the catalyst to shoot this sucker up all the way to the 100? No, I highly doubt it. No reason for it, right? But what do we have a catalyst for? Well, the 10 SMA is close, right? That's within reason because we're long bias. It is fail breakout Friday. So mindful of that, okay? Because we can just do this for most Fridays. Now, the 10 SMA would also be on my list of potential long targets because of the distance, right? I'm not going to target something that's super far away, like, oh, we could run to the 100. Why? Why are you choosing the 100 EMA so far away, right, without catalyst? You think we're going to get a 2% move off today on a Friday with no catalyst? Highly doubtful. The market doesn't like that. So I would pick 10 SMA. And the last part of my strategy for my opening, I need to pay attention. The big takeaway here, you need to pay attention to what's close and what's targetable under the terms of psychology, okay? Because hype, fear, and greed run the stock market. Hype, fear, and greed, not technical analysis. The algorithms, hype, fear, and greed. News pieces, tweets from Trump. Remember when he used to say China in the freaking market would go crazy? Hype, fear, and greed. So if we do not have a catalyst that is designated to hype, fear, or greed, we're not going to get a hype, fear, or greed move. So psychology is one of the biggest takeaways in our pre-market breakdowns in what's going to happen, because we need to understand what possibly could or couldn't happen. And that's one of my biggest extra takeaways. So I know it's very basic and very vague, but that is the setup I usually use if I can and cannot find fibs, anchors, and algorithms, okay? And with that being said, the last little bit of the piece here, we're in a Friday chop zone, but the last little piece is oscillation indicators. So I generally will look at the oscillation and how much time is spent in the bottom or top channel. And what I mean by that is the oscillation indicators, I utilize a 50% retrace. So the 50 point on RSI, the 0 on the MAC, which means how much time pre-market have I seen this line hold above RSI or below, and how much time has been spent above on the MAC and below on the MAC. And if I get a good reading of that, it can actually tell me the sentiment of the day, or at least help me with the sentiment of the day. If we move back into something that wasn't a forced up squeeze scam here, on a breakaway, well, we could use this one. It's not that big of a deal. So on the force up here, the oscillation indicators are what we use to obviously articulate confirmation. So we had that force up here in price action, go, go, go. And look, we stayed above in the top channel of the RSI the entire day. We never dipped into the bottom. What does that tell you? We hold the 50 RSI, 50 RSI, 50 RSI, even a little bit of that's the end of the day, doesn't matter, right? Look at the MAC, loop, stayed above, stayed above, stayed above, complete divergence in price action on the MAC, but the RSI saved the day here, right? Top channeling. So again, sentiment off of the oscillation indicators is something we always want to pay attention to as well. So I hope that helps with the pre-market breakdowns. Those are some of the ones I would always utilize interesting and articulate on those daily Fibonacci's. Look at our pre-market algos, find our anchors for yesterday no tag, right? Prior day no tag, or pre-market no tags like we showed you. And those are probably at least the three biggest things under psychology for what we have for data, because none of this matters and no technical analysis matters if we do all of our technical analysis here and then CPI comes out at 7:30 a.m. Central and it does this. You got to be mindful for the hype, fear, and greed catalyst, right? Hope that helps out. Comment if you got any other questions so we can make some shorts on it, and we'll see you guys on the next.